Are you selling on Facebook Marketplace, Vinted, or maybe even eBay? Well, the rules have changed, and HMRC is now getting your sales data automatically. But don't panic. In this straightforward guide developed by the experts at ProTax Accountant, we're going to cut right through the confusion. We'll give you the clear, simple facts you need to sell online with complete confidence. So let's get right to it. You're selling a few bits and bobs online, maybe decluttering the house or even running a little side hustle. But in the back of your mind, there's that nagging question, right? Am I about to get hit with a surprise tax bill from HMRC? Well, if you're feeling that way, you are definitely not alone. A major change took effect in early 2025, which means platforms like Facebook and Vinted now automatically report your sales info directly to the taxman. Now, this is not a new tax, but it is a whole new era of transparency, and that means understanding the rules has never, ever been more important. To make perfect sense of it all, here's our simple roadmap for today. We'll break down the new rules, help you figure out if you're what HMRC calls a trader, and then we'll get into the magic numbers that could save you a lot of money. After that, we'll cover the easy way to keep records, what to do if HMRC actually contacts you, and finally, your clear next steps. Let's get started. Okay, first up, the new rules explained. Let's get right into exactly what's changed and, more importantly, why it's happening. Honestly, understanding this is the foundation for everything else we're going to talk about. So, how did we even get here? Well, this all kicked off back in January 2024 when the UK adopted a set of international rules for digital platforms. Throughout that year and into 2025, platforms were busy collecting seller data. And since January 2025, they've been reporting that information directly to HMRC once a year. The goal is pretty simple, really, to make sure everyone pays their fair share of tax. Now, these are the crucial trigger points you need to know. Platforms don't report everyone. They are only required to send your data to HMRC if, in a single year, you do one of two things. Either you sell more than 30 items, or your total earnings go over about £1,700. Now, listen closely, because this bit is vital. Hitting one of these thresholds does not automatically mean you owe tax. It just means your information gets shared. And that brings us to what is, without a doubt, the absolute heart of the matter. This is the single most important question you need to ask yourself. Why? Because the answer to this one question determines whether you have any tax to pay at all. So are you simply selling personal items or are you trading? Let's make this crystal clear. On the left, we have someone who is just selling their old stuff. Clearing out the loft, selling unwanted Christmas gifts, just a bit of a declutter. In nearly all these cases, you're selling things for less than you originally paid. So there's no profit, and that means there's no tax to pay. Simple. But on the right, we have trading. This is where you're buying things specifically to resell them, or you're making items to sell, or you're just selling things really often. The key difference here, the bright line, is the intention to make a profit. And look, this isn't just guesswork. HMRC uses an official checklist called the Badges of Trade to figure out if what you're doing is a business. There are actually 9 of them, but these 4 are the big ones for online sellers. Is your main reason for selling to make a profit? Are you selling things frequently and regularly? Are you selling items you only bought to flip, not for yourself? And a perfect example of this is upcycling furniture. Say you're a freelancer in London who buys old chairs, paints them up, and sells them for more. That's supplementary work, and it definitely points towards trading. No single badge decides it, but if you're ticking a few of these boxes, HMRC will probably see you as a trader. Okay, so let's say you've looked at that and thought, yep, that's me, I'm trading. What happens now? Well, the next step is to get your head around the key financial thresholds. Think of these as the magic numbers that determine if you actually need to pay any tax this year. The first and most important number is £1,000. This is your tax-free trading allowance. It basically means the first £1,000 you make from your side hustle is completely invisible to the taxman. It's the first real safety net for anyone with a small side gig. Now, here is a massive pro tip, and trust me, this is the trap that catches so many people out. That £1,000 allowance is for your total revenue. That's your gross income, the total amount of money people paid you. It is not your profit. So if you sell items for £1,100, even if your costs were £500 and you only made £600 profit, you have still crossed that revenue threshold. And that means you must register for self-assessment. That's not all. Here's where most people go wrong. But here's the next safety net. Just because you have to register for self-assessment, it doesn't automatically mean you'll be writing a big check to HMRC. Everyone in the UK gets a personal allowance, which for this tax year is £12,570. This is the total income you can earn from all your sources, your main job, your side hustle, everything, before you start paying a penny of income tax. And finally, there's one more number to keep in the back of your mind, though it's much less common. This is for when you sell a single, really valuable personal item, not as a trade. If you sell something like a piece of art or jewelry and you make a profit of over £6,000, you might have to pay capital gains tax. It's pretty rare for most online sellers, but it's still good to be aware of. Right, we've gone through the rules and the numbers. Now for the practical part that ties it all together, keeping good records. I know, it sounds like a massive chore, but believe me, this is your best defense. It's the absolute key to staying compliant, paying only the tax you actually owe, and having total peace of mind. So what do we mean by good records? Well, it's simpler than you might think. Just keep a spreadsheet with every sale. The date, what you sold, and how much for. Keep the bank statements that show the money coming in. And crucially, if you're a trader, you need to keep receipts for the items you bought to resell and for all your expenses. We're talking postage, platform fees, packaging, all of it. Even just taking a quick screenshot of a transaction can be a real lifesaver. Being organized is your superpower here. So, how long do you have to hang on to all this paperwork? The official rule from HMRC is at least 5 years after the 31st of January submission deadline for that tax year. So, for example, for the tax year ending in April 2026, you need to keep your records safe until at least January 2032. Now for the parts that I know can cause the most anxiety. What actually happens if that brown envelope from HMRC drops onto your doormat? Let's talk about the infamous nudge letter and take all the fear out of it. Stay with me, the next point might surprise you. First off, what even is a nudge letter? Well, the name tells you pretty much everything you need to know. It's a prompt from HMRC, a little nudge for you to double-check that you've declared all your income correctly. It is not a formal tax investigation, and it is not an accusation. But, and this is critical, it absolutely must be taken seriously. So, if you get one, here is your simple 4-step action plan. Number 1, do not panic. Number 2, check your records. See? This is where all that good record keeping really pays off. 3, respond promptly. You'll usually have 30 days, and ignoring it is the absolute worst thing you can do. And number 4, and this is the key advice from the experts at ProTax Accountant, get professional advice. An expert can look at your situation and make sure you respond to HMRC in the right way with total confidence. We have covered a lot of ground, from the new rules all the way through to what to do if you get a letter from HMRC. So let's pull all of this together and look at your next steps to make sure you stay compliant and know exactly where to turn for help if you need it. Hopefully, things are feeling a lot clearer and less scary now. You see, knowledge really is power, and the final step is just using that knowledge to take control of your tax situation. Being proactive is always better than being reactive. And you really don't have to navigate this all by yourself. If you're feeling unsure about any of this, or you just want that peace of mind, talking to a professional is the smartest move you can make. The team at ProTax Accountant are specialists in helping online sellers just like you. For friendly expert advice, you can get in touch with them on WhatsApp or by phone at 07985 689 912, or just drop them an email at info@protaxaccountant.co.uk. For an even more detailed breakdown, you can read the full guide this whole thing was based on over on their blog. The address is right there on the screen for you. And while you're at it, why not subscribe to their YouTube channel for more simple, clear tax guides just like this one? And finally, a very important disclaimer. The information we've shared today is for general guidance and educational purposes. Everyone's tax situation is unique and can be complex. So before you take any action or make any financial decisions, we always recommend you consult with a qualified professional like the fantastic team at ProTax Accountant to get advice that's tailored specifically to you. Thanks so much for watching.